You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what the heck is going on in these markets? Well, let's find out together, shall we? It is time for episode 2 of your bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which all you folks are mainlining these days. Don't worry, there's more bandwidth where that came from. So feast, go on. You want to go plug out that show from 2013, 2007, maybe even. Have at it. It's all there for you. Of course, if you like what you hear, any of that stuff in the archives, the new stuff, whatever the heck floats your boat out there, throw a like, a star, a comment, a rate, a review. All that stuff does help new people continue to discover the content. And of course, if you want to discover more content in your lives, let's say, for example, I don't know, you've always wanted an awesome, contentious debate between our buddy, Mr. Dr. Vix, and his nemesis in futures options, Miss Carly Garner. Well, we made it happen because you folks requested it yesterday. It was pretty awesome. That hit the Pro podcast feed yesterday, last night, actually. So you folks can check it out now. If you head on over to theoptionsinsider.com/pro. Got a little contentious there. Had to separate them virtually a few times, but a fun time was had by all. Of course, you get options oddities after vol views every week. You get all the great stuff. I just sat down with Kathy Clay from CBOE down to the FIA Expo, or actually FIA Boca conference last week. That was fun talking about all the things that are top of mind to you folks right now. 0 day. What's going on with the 1 day VIX? Are we ever going to trade it? When will we get our NVIDIA 0 day? You know, what's going on with the Bitcoin options? All that stuff you folks hit us up about. We put it to them. What did she have to say? Well, you can check it out over there on the Pro as well. That'll be hitting the network probably next week if you're on the on-demand side. So check it out, theoptionsinsider.com/pro, the place to go to learn more. As we go around the horn, see who's joining us on the old program today. I should say right here at the top of the show, our buddy, the prima-ist of Donnas, of course, the uncleist of Mike's, which is Uncle Mike TOSAW, going to be fashionably late, as always. You know, he likes to make a splashy entrance on Thursday. So you know what? We afford him that. You got to cater to his ego every now and then. He thinks he's the star of the show. So, you know, we got to let him do that every now and then. So instead, we'll go out to the Southern Volatility Mecca, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Fresh, I hear, off a vacation. Mr. Meatball, where'd you go, and are you rested and recharged, sir?
I'm feeling great. Yeah, we went to Disneyland and Universal Studios in California because they had the new Super Nintendo World.
Oh, yeah.
And it was awesome. It was really cool. You should, I know you're a gamer. You should definitely go check it out.
We were planning for our spring break trip. That was one of the things we had on the destination list. Maybe go check out Disneyland and indeed Universal Hollywood. Didn't make it this cut, but maybe this summer we'll go out and head out there and check it out. But cool stuff to be seen out there. Haven't been to Disneyland in forever, and Universal Hollywood even longer. So crazy stuff afoot out there. I like the occasional park. I think that's well known by now. And I mentioned Uncle Mike joining us fashionably late. It is Thursday. This is also where we're usually joined by the Flowmaster, but the Flowmaster actually enjoying a nice beer and a curry on his flight back from London right now. So he's having a good time. And in his stead, we are joined once again. He joined us for the first time back in January of this year by Kevin Carter, also holding down the fort over there at CBOE. I'm not sure if he's CBOE East or CBOE proper, or perhaps even was it CBOE South. I guess we'll find out. Kevin, welcome back to the show. Which CBOE are you beaming in from these days?
Thanks, Mark. I guess I would classify as the CBOE Southeast. I am in South Carolina right now in Charleston.
You're the lone CBOE rep in South Carolina.
I think so, yeah.
An office of one. So there we go. We got CBOE East, CBOE proper, and now CBOE South as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get to it. Time for the block of trading. And man, what a week. What a week the Bulls are having, huh? You know, everyone waiting on pins and needles for Powell and company to do their thing. A lot of people coming out saying maybe they won't reiterate the whole 3-cut things. People talk about maybe they're actually going to talk about about raising rates again. All this kind of crazy noise swirling into the ether. Turns out not the case. Market liking what it's hearing, rallying hard yesterday, continuing the rally today, even if we are a little bit off the highs now. The S&P, not long before the start of the show, was up nearly a full percent, around 0.8% or so. Coming off that a little bit, up about 0.6% now. Still feeling joyous, feeling optimistic, up over 30 handles. The NASDAQ up about 0.75%. It was threatening a full percent not too long ago as well. The Dow still feeling its oats. The now Amazon refreshed Dow, 0.87%, so almost 0.9% to the upside out there in Dowland. And let us not forget our old friend small caps. It's a day that ends in Y, so we know something crazy has to be happening, I should say, out there. And yeah, it's up about 1.3% out there for the old small caps. So a lot to unpack. All this a long way around to saying all that Fed juice that was built into the market, most of it getting squeezed out now. VIX, when we kicked off the show, back at a 12 handle, listeners. 1290 to be precise, down almost 1.5 points, about 1.45 points from where it was on the Monday show. VVIX, like we said, getting frothy again, then giving it all back down to a 79, down a whopping 10 handles from where it was on the Monday show. Were they pricing in a little bit of Fed juice? Yeah, I think they were. VXX 13.25, down a little over half a point, about 0.6 of a point. UVXY 640 down 0.6 of a point. I do have word that they are planning the much anticipated UVXY split. So I think it's coming in April 22nd, perhaps. So now we got to wait for UVIX, but there you go. Getting a little bit ahead of the game for the UVXY folks, which is nice to see. 640 down 0.6 of a point from the Monday show. SVIX, just in time for the Meatball and Mr. Dr. Vix to bail on it, hitting yet another new all-time high at about a 42 when we kicked off the show, up about 2 points from Monday. They hit an all-time high of about 42.64 intraday earlier today. So, VIX keeps getting lower. SVIX keeps getting higher. That's kind of how that relationship works. And good old UVIX down a point, managing to remain stubbornly frothy compared to VIX and everything else, down about a point from the Monday show out there, but actually rebounding off the lows out there as well. So intriguing stuff. Am I speaking like someone who may have a few UVIX puts in his back pocket? Yes, I am. So perhaps I am a wee bit biased on that front. But let's go around the horn. Let's start with our guest from the CBOE South. Kevin, you picked a good week to come on. A lot popping off. What were your thoughts on what the Fed had to say and the market reaction out there, sir?
I mean, I guess I was a little surprised by their message there. From my vantage point, I'm not seeing inflation cooling, but perhaps that's what they are seeing. I don't know if it's a political thing or not, but to still want to do 3 rate cuts with the market doing what it's doing is actually kind of mind-boggling. But that's what you're seeing stocks up again today, right? I mean, they're giving stocks all the gasoline that they want. So if that's the idea that the Fed's trying to do, then they're doing it right. But I don't know if they're supposed to manage the stock market or manage inflation, but the verdict's still out on that. But they're doing a great job managing the stock market. That's all I can say. As everything that, wants rates lower is responding to it. I mean, you look at, you got the Vornado, real estate stuff coming through today. Metals are hot again today. It's another day for semis to just kind of take out the highs. Financials now taking out highs. So it's pretty healthy out there in terms of the force to the upside.
Are you implying somehow that in an election year, the notion of rate cuts would be driven by politics, sir? How dare you?
I'm just implying that the Fed's been political ever since they were kind of invented. So I don't think it's just this year. I think it's every year.
We just see it in much more stark relief during a presidential election cycle. That is for certain. Anything catching your eye out there in the world of options or indeed volatility this week, sir?
Same old theme of stocks up and, vols up. You're even seeing that again today in financials, which they're not known for their vol pops, but Goldman Sachs stock breaking through, vols are up. So that's still kind of the theme, is that the upside is still very much feels like underinvested as people chase calls as we break out every time. So until that reverses, I think you just gotta, you gotta ride that trend.
Definitely does seem like underinvested to the upside. I like that. Way to put it euphemistically, sir. But you're right. All these other factors, market does seem hot. You're right. Inflation, a lot of the areas that matter to people doesn't seem to really be mitigating. Job market hot. Fed's like, damn the torpedoes, full speed ahead, 3 rate cuts. Yes. Election cycles, always fun times. Mr. Meatball, sir. Same question for you. Obviously, a hot potato out there in Fedland. What were your thoughts and the market reaction, and then what we're seeing as a result in the world of options and vol?
What's interesting is the market continues to underprice movement. Straddles and strangles just seem too cheap. Going into yesterday, the money straddle was about $36. We moved 45. The week out strangle was about $65. We've moved 80 over almost 90 points. Premiums just, that front-dated option selling seems to really be putting a damper on intermediate vol. What's interesting today is that on this rally, we're starting to see downside skew lift. A pretty nice run higher in out of the money puts, to the cheap ones, not like meaty ones, which I think is pretty interesting. We did see this on a, well, this looks okay. We finally have kind of a normal VIX futures curve with the VIX trading around 90 and the April future at 1455. The spread is pretty normal, which is the first time I've been able to say that in what feels like months. So there's definitely been, a change in the market, but that downside curvature, that lift and downside skew, I think is really interesting today. To put this in perspective, yesterday leading into the Federal Reserve, I bought the 5170, 5190 strangle. I sold the calls. I paid $70. This was expiring March 28th. I sold the calls at 75 and 80, and my puts, while we've been going up, have gone from $5 to $6. A $5 option going up $1 when the market.
I think we'll work to get the meatball back, but his point well taken out there. Things starting to firm up there on the downside. Let's see if all this firming up action is translating into any real action out there from an overall markets perspective and volume perspective. And the answer is, yeah, it's pretty robust out there, listeners. Let's go out there first and let's take a look as I work to get all of our people here back on the show. There we go. We'll work on that in a little bit. Let's go back right now. There he is. All right. Mr. Meatball, anything else to add? We lost you at the end there.
Yeah, well, I was just saying that, the strangles are too cheap. And the downside curvature has been pretty dramatic today. So, if maybe we get to 5,300, but the general increase in implied volatility as we've been rallying is a little bit alarming. That is what is throwing me off.
That is maybe a sign that a little bit of the old quote-unquote spookage seeping into the market. Tried to argue how it wouldn't with all this other stuff going on out there. The continued rally to the upside. At a certain point, people have to start looking to the downside. Perhaps that day is today, or perhaps not. Perhaps it's just the old skew rotating, listeners, as we have seen out there many times. Let's go out and see what we're seeing out there as we await for the official arrival of the uncleist of Mike's, Mr. Uncle Mike TOSAW. Let's go out and check what's going on out there in the markets. Fire up the old trade alert machine, see what it finds for us today. First, let's go out to VIX land. And is VIX popping in this post-Fed day, listeners? The answer is a resounding yes. 677,000 contracts on the tape right now. So a pretty action-packed day, especially when you consider the ADV is only 690,000. So we're already at almost a day's worth of volume. So Fed adding a little bit of juice right now. The big dog out there today, the April 16s, 55,000 of those, followed by 42,000 for number 2 of the May 35s, and 42,000 as well of the April 13.5 puts. So interesting stuff out there. So look really quickly. Looks like the May 35s traded in a block of 38,000 for 32 cents. And then we have the 16s going up for 72 cents, 30,000 times in one block as well. So interesting. You like either of those? Listeners, we'll get into more detail and all that fun on volumes tomorrow. The SPY, 4.8 million contracts against an ADV of 8.4. So SPY looking frothy today as well. Is the S following suit? You know it is. 1.75 million right now. The ADV about 3.25 million. So the S looking frothy. Small cap saying, hold my beer, kid. 1.1 million contracts on the tape already. That sounds familiar because their ADV is also 1.1 million. So already at a day's worth of volume out there in small caps. Like, we never do this. Let's fire up small caps really quickly, see what the big dog is out there. And you know what looks like a May 195, 198 put spread going up about 85,000 times today is the big dog out there. Might be a bit of a roll, though, because it looks like it might be closing on the 195 puts and opening on the 198. Interesting. So rolling up your puts, rolling up your protection, maybe. Either way, size looks like size put spread / roll. Dominating the tape for about 160, almost 170,000 contracts out there. Wow, impressive stuff That obviously why we're hitting 1.1 million already, and not to be outdone, the Qs actually hanging out pretty much right about the level they normally are this time of day. 2.16 million against an ADV of 3.88 million. All right, off to the single names we go. Let's see what we have cooking out there. Is it a banger day in single name options? The answer is, it's respectable. Right around 250,000 contracts, 249,000 to be precise. That's what it cost you to break into the top 10 today. That gets you over there to Mara. Mara looking robust again, off 17 cents, but it's back up to 22 and a quarter. It was just $19, I believe, on our last show earlier this week. So Mara, if you want a name that's just rocking and rolling and print and size options volume to boot, you can do worse than Mara. It's up $4.40 or about 25% just in the last 5 days. So this thing, 15 up to 30, back to about 15. Looks like it's maybe back on its way up to 30 again. Who knows? But this thing has been all over the place over the last month. And again, good for number 10, 249,000 contracts. Keeping it on the crypto theme. Number 9, it's Coinbase, 253,000 contracts, 270 and a third, up about 13 and a half bucks or 5.25%. My goodness, just a huge, it's like an analyst raised their price target on Coinbase. You know what I say at the end of the day, listeners. More buyers than sellers out there for Coinbase. Number 9, little north of 250,000 there. Number 8, Bank of America, 258,000, 37 and about a half, up about 70 cents today, or about 1.4%. Number 7, a name that has been a frequent offender for the better part of the last year, if not longer. It's good old Softy, 277,000 contracts. Microsoft, 429.16, up about almost $4, or nearly 1% today on just a more buyers than sellers day. Why not? Number 6, listeners, it's the newest member of the Dow. It is Amazon, 381,000 contracts, 179 and a third, up about $1.20 today, or about almost 0.75%. Number 6, going back old school, back to the .com boom days. It's Micron. Number 5, 681,000 contracts, 112 and a quarter, up 16 even, or about almost 17%. My goodness. They're starting to ride the AI wave as well. Why not? Everybody else is. I've always said that's good for roughly 20% in your stock the second you say those two magic letters, and they're up about 17%. So again, the proof is in the pudding, listeners. Number 4, speaking of AMD, excuse me, speaking of AMD, speaking of AI and those two magic letters, it is AMD. Spoiler alert, listeners. AMD coming in at the number 4 spot this week. 765,000 contracts, up about $1 and change, trading almost 181. It's not a huge mover today, but a decent volume day nonetheless for AMD. Right behind it, when we talk about AMD these days, what else do you think of? You think of NVIDIA. Number 3, we're already north of 1 million. It's only at number 3. That's interesting. 1.14 million on the tape for NVIDIA. 920 and 3/4, up about $17 or nearly 2%. Because why not? Day that ends in Y. Number 2, this is interesting. Number 2, haven't seen this in a while. Yes, Tesla kicked down to number 2, 1.31 million. Tesla 173 and about a third, off about 2 and a third right now, about 1.3%. That means what? What could possibly take the top spot this week, listeners? What could possibly trump Tesla or NVIDIA or maybe AMD, some of these other hot names that are lighting it up out there right now? What's a name that we haven't said yet, listeners? That is usually in our top 10 every day. Oh, yeah. It's the fruit company back on the top. Maybe not on top from a market perspective, getting killed today, but on top from an options volume perspective. 1.56 million contracts. It's been a long time. It's been an eternity since we've seen Apple put up those kind of numbers. All it takes is maybe a little bit of a DOJ lawsuit against you. Stock getting hammered off $6.50 today, about 3.6%, trading 172 and about a quarter. Let's see how low did it get. It got as low as 171.83, so about 40 odd cents off the lows, but not a great day, obviously, for the Apple bulls. Whenever the DOJ sets its sights on you, usually not a good thing for the stock, but a good thing from an options volume perspective out there. Going on out to the earnings front. Let's see what's catching our eye this week. We mentioned there's still some names popping off, including Monday. We had our old friend Stone Cold, the Meatball's favorite name out there. And also, speaking of the Meatball's favorite, today we have Darden Restaurants, another one of his favorites out there, Nike, Lululemon, and FedEx. Yesterday, we had the aforementioned Micron, as well as Five Below, Ollie's Bargain Outlets, and all kinds of fun. Coming into the start of the show, luckily for you, we have hot off the presses some earnings move results reports from our friends over there in ORAS land. Five Below popping off yesterday after the bell. They were at about 209 going into their announcement. They were pricing in 6%. They delivered almost 13% to the downside. Stock getting crushed. So clearly, we've seen this in the dollar store segment, obviously spilling over into the $5 segment now as well. The stock's off about 16% now, trading 175 and 3/4. So they are coming for Five Below today. Let's see how the Meatball's favorite is holding up. Darden Restaurants. They were today, before the bell, 174.5 is what they were pricing in, or what they were trading at, excuse me. They're pricing in 3.5%, and today they have already moved about 6%. So pricing in and delivering a fair amount of juice out there for Darden Restaurants. It's off almost 7% now, trading 163 even. So they're coming for the Meatball's favorites. Let's go out to Micron, 96.25. They were yesterday after the bell. They were pricing in 9.1%, as you mentioned earlier. They were rocking and rolling today, up about 14.5%. When we ran this report, they're obviously up more than that now. So outperformance, the name of the game. Let's see if CHWY can deliver as well. 17.75 is where they were trading. They're pricing in 12.7%. Up, they get the whammy. Only 5.3% is what they delivered out there today. If you want to see all this for yourselves, as well as upcoming names, Lululemon after the bell today, Nike, all this good stuff, it's all there for you. TheOptionsInsider.com. Click on the Options News and Articles tab to begin your journey to the dark side. Speaking of which, if you want to see the earnings season as it's shaping up right now, you want to see why so many names are pricing in more juice, that's probably because the season is averaging 127% right now. I mean, that's kind of bonkers territory. I never remember seeing it that frothy in all the years we've been crunching this data. So fascinating stuff. And speaking of fascinating stuff, we have saved perhaps the best for last. We shall see. Fashionably late, as always, we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management, making his fashionably late appearance as he is wont to do. Mr. Uncle Mike, welcome to the show at last, sir.
Hey, it's all about me. I want to be talking in the middle of the show, right when the ratings are the highest. That way people can hear what they came to tune into. Good old Uncle Mike. No, just kidding. Of course, I'm just happy to be here. On the markets today, I think we're just traders are happy because it looks like we might lower rates this year. But from the language that I heard, it's kind of like, we think we're going to lower rates, but we might not. But yes, we will. No, we won't. But apparently the street believes that rates could be lowered. But I guess I'm not convinced that it could be. But the street is. So that's exciting for markets. And, in looking at this, a lot of names are pretty happy because of this, but I think ultimately what boils down to is the Fed. We're not getting a major buy-in in the bond world. We're getting buyers, but we're not getting a major move, so to speak. So I'm kind of making my focus more on the bond market as we are going forward with this. But a lot of interesting stuff. A lot of things are happening in this market, and I'm just curious. I'm actually really, there's times to where I see the market not doing anything. And I'm like, even if the market goes down, just do something already. I'm getting bored here. I think that the market's not going to be boring the next couple of weeks. So I'm very excited about it. And that's what I'm seeing today.
I was going to say, as a perma bull, you can't be bored with all this green on the screen, so you got to be loving it out there. So you had the same kind of read that I did with the Fed. That it didn't seem like the Fed was waving the green flag, and yet the market's like, they're waving the green flag. Let's buy it all. So you came out of it a little bit maybe dubious as to their outlook as well, which is kind of interesting given the perma bull that you are.
Well, the market's always going to go up all the time, no matter what. Even if America goes bankrupt, we're going to have a 10,000 S&P 500 by the end of the week. No question about that. But yeah, I think just based on the Fed, I'm not a perma bull on the U.S. government and the people that are running it, whether it's Democrats or Republicans. So I'm fair on this. I am not a perma bull as a politician. Let's just say that.
Well, let's see if we can find some interesting perma bull or perhaps perma bear paper, because it is time to get weird. It is time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Our chat is surprised that Tesla and NVIDIA aren't number one. Yeah, that's what happens when the DOJ comes after you. You get a little bit of options paper as a result. Let's see what kind of paper we got lighting it up. Now, Kevin, I know you were thrust into this at the last minute. This is usually the portion of the show where the flow master holds court, finding some interesting little speculative nuggets of options paper that came across his radar. I'm curious if you have anything, if you came armed with anything, by all means, we can get onto it. Or I also have a bunch of trades we have in the backlog that we need to pay off from the flow master as well. So I'll let you pick which way you want to go, sir.
Sure. Yeah, I mean, I'll highlight a couple here. I mean, they're not like super, low cap, but like JP Morgan, I think that's pretty interesting with this May call spread that's gone up over 20,000 times to 200, 220. I think the financials now are starting to get a little, attraction here. Semis have been a very popular space, but you can certainly see volume coming into the fins today. So that was one that I paid attention to.
With that May call spread, did it look like they were rolling that April and levering up, or were those two separate trades? Because there was an April 190, 210 that went up, and then the May 200, 220. I thought that I wasn't sure whether that was a roll or not. I don't know if you have any insight there.
I see the 15,000 go up in the 92.10 in April. I'm not entirely sure. I mean, the volume is certainly real enough to take the vol up today.
Yeah.
So, I mean, something to be said for here. And I think that, it's just as we kind of rotate away from hot spaces into the, like even metals, you look at the metal spaces now, those are heating up commodities. So, it's just the market's starving for value. So it's just kind of moving down the line is kind of what I'm noticing.
Yeah. I'm looking at that April spread right now. You're right. You would think it was an April 190, 210, which traded 15,000 times today, but those April 190s were opened kind of by themselves back on February 23rd. The 210s didn't trade that day. So kind of weird stuff. They went up for looks like about $3.30 back on February 23rd. So interesting stuff. Are you down with a little bit of upside in the financials, listeners? You like a little bit of par 220 vertical going up here in JP Morgan. Let's see. I don't have the prices. Let's look really quickly and see what they did it for, listeners, so I could give you a sense of if you like. Looks like they did it for $4.90. So you like that? $5.60 on the pars and 70 cents on the 220s. Interesting. Not a lot of juice for those 220s, but guess you get what you get out there. Let's keep on rolling. We've profiled a lot of trades with the Flowmaster on his segment over the past year and change. We have a lot to pay off here. Let's go back first to the December 18th show, listeners. To everyone's favorite, this is Nordic American Tankers Limited, ticker symbol NAT, N-A-T. Let's see, trading right now. Yeah, it's not a spoiler. I can tell you where it's trading right now. $3.98, up about 13 cents or 3.5%. So a decent little day for Nordic American Tankers. On the year, it's pretty much almost exactly on. It was $4.18 a year ago, $3.98 today. So it's off 20 cents on the year. So net has done a lot of churn, generating nothing at the end of the day. They got as high as about $4.83. That was back in right around Halloween, and then the low came about $3.25. Looks like that was back in the days of May last year. It's a little bit post contagion fears last year. So kind of a net nothing year for NAT. We talked about him back on December 18th. Paper piling in, gobbling up 6,000 of the 4 half calls, lifting the offer for 15 cents. And you can maybe guess these probably didn't work out that well because the stock is kind of net done nothing. But actually, the stock at the time they put it up was $4.21. So it wasn't that that far they had to go on these calls. They liked them so much they did a total of 15,000 on the day. So it was a pretty sizable trade. And you know what? They actually ended up coming close. Coming close. The stock closed at 444. So they got within spitting distance. But you know what? These people didn't wait too long. They didn't wait till expiration in January. They got out on the 5th. So not quite a month after the trade, a few weeks after this trade. They kind of bailed when the stock, they were savvy actually. The stock was 461. So the stock had rallied exactly 40 cents. And they decided, you know what? This is about as good as it's going to get for us. We're going to bail, take our money and run to the tune of 25 cents. So they made a dime. So obviously on that one print, they pocketed 60 grand. You do the full 15,000. I don't know what prices they got the other ones for. Obviously they made more money than that, but not the biggest home run we've ever seen. But also you maybe have to tip your cap to them getting while the getting was good, because that was pretty close to the high, certainly during the period that they held these options. That was, I think, the high, right around that level. So they pretty much sold the high. So good for them. Mr. Meatball, anything to comment on these folks knowing when to get the heck out of Dodge in Nordic American tankers, sir?
It's shocker, right? That they buy the stock, that it moves their way, and then right before it turns around, they get out. I mean, it's incredible how lucky these traders are, isn't it?
They are a fortunate bunch. Let's see if we can find a little bit more good fortune for some of our people that our buddy the Flowmaster was highlighting around that same time, early December 7th. We were talking about, the Meatball. The Flowmaster was talking about a size call sale out here, and everyone's favorite name, MetLife, ticker symbol MET, M-E-T. At the time, let's see. Well, first off, on the year, stock's trading 73 1/3 right now, kind of unched on the day. On the year, they've had a decent year. It was $58.50 a year ago, so they've rallied nearly $15, or about 25% on the year. Most of it straight up, with a little dip back in May down to about $48.95. That was their low for the year. And they never really looked back throughout the year. They had a couple little sell-offs in Halloween and again late January, but other than that, it's been mostly straight up. What we profile back on December 7th? Well, the Flowmaster was all excited about somebody blasting away on a bunch of February 67.5 calls. They sold 14,000 for $1.01, not tied to any stock. They were about 6% out of the money at the time. They took in about $1.4 million worth of premium. He even pointed out when we talked about it back on the 7th that the stock was 74 a year before that. So they were playing with a little bit of fire, not much, but a little bit. He also pointed out at the time the head of index partnerships over there at CBOE thought financials can struggle in the current interest rate environment. So he thought this person was buying into that and fading a little bit of upside. And it ended up not working out great, but not working out terrible either. Kind of a bit of a scratch. The stock ended up closing on expiration around 68 3/4. So obviously not quite $1, about 75 cents through that level that they sold for $1.01. So they ended up making about $0.25. Nothing huge. These calls were still open. So if these people are to be believed, if this paper is to be believed out there, listeners, right? Then it looks like they were firm in their convictions. They wanted to let some stock go at prices around 68.5, and indeed they did out there. So yeah, 68.5. Actually, they sold 67.5 calls, so $1.01. So that would be 68.5. So they were about $0.25 against them, obviously, when these went out. So they ended up dropping about $0.25, but still not the worst thing. And if you're convicted in letting your stock go at that level, I guess you're not too upset. We've always said it. If your stock gets called away, you win. Obviously, in hindsight, the stock is up about another $5 from there. So maybe they're not too happy with that. But I don't know, Kevin, a sizable call sale seems like it kind of worked out the way they wanted. They were okay, obviously, letting their stock go at 68.5. And that's pretty much what they did, sir. Is that your takeaway as well?
Yeah, I mean, that would be what I would kind of assume happened there. I think it works. Those can work out great for both parties usually. Where if you buy those neutral, or even if you buy them outright, you can spread them. So it's nice to find vanilla sellers like that, where I think that they got what they wanted, which was to overwrite their stock potentially, and the option buyers got probably a good price to get some directional movement out of it. So
it's a win-win. People always ask me if options are a zero-sum game, and I say hell no because of stuff like that. All right, let's keep on rolling out into our final review victim for today. This is good to kind of clear out the Flow Master docket here. And this one goes back to September 11th, an inauspicious day, to Copart Inc., ticker symbol CPRT. This is a global provider of online vehicle auction and remarketing services. Trading right now, 57.62, up about 72 cents. So nice little pop for them today on the year. Been a pretty darn good year for them. They've been pretty much straight up. They were $35.50 a year ago. So they're up about $22 right now, or about 62%. So Copart, go figure, looking pretty good. They surprised on earnings last year. They also had, looks like just hitting new all-time highs, rallying 5% back around a little bit after Halloween. So they've been just pretty much a straight-up chart all year round. What did we talk about back on September 11th? Looked like somebody was feeling their oats out here. They were liking a little bit of upside to the tune of scooping 2,000 of the October 45 calls. They paid a fairly rich $1.38 for these. That's about a 25 volats, a little bit, couple of cents off the offer. The stock at the time, well, actually, this is probably why they were so expensive. The stock at the time was $44.63. So these were pretty much at the money calls at that point. Also worth noting, they had earnings coming up a couple of days later on September 14th. So this was obviously a very clear swing for the earnings fences out there. And you know what? I mentioned all this straight upside on this chart. That's what makes this one even a little bit more painful. This was one of the few periods, looks like, where the stock took a little bit of a backward step. The stock ended up closing on October expiration, which, remember, we've talked about that before, listeners, that around that Halloween period heading into the end of October was kind of the nadir for a lot of names, and that seemed to be the case for Copart as well. They closed on expiration $43.69. Like I said, they spent nearly $1.40 for the 45 calls, so back of the napkin math, these did not work out. They were still open at expiration, so it was close but no cigar, listeners. A paper drop in around 276 grand on this bad boy, all considered. So, you know what? Even if you buy calls on a name that's pretty much straight up all year round, you can still lose. You have just a little bit of the wrong frame of reference on your trade. Fascinating stuff. Let's see what you folks have on the brain. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get to it. Let's put on our question answering pants. First, let's see what our folks had to say last week. Our question of the week, an interesting one, surprisingly one we've never asked you about before in the long 17-year history of this network, which is surprising. It's taken us this long to get to this, but very straightforward question last week. How many options positions do you normally have open in your trading account? 1 to 5, 6 to 10, 11 to 15, or north of 15? And almost 61% of you said 1 to 5, followed by number 2, almost 20% for 6 to 10, then close to 15% for north of 15, and right around 5% for 11 to 15. So obviously 20% of our crew in the hardcore north of 10 camp for trades per day. Now, obviously, you could trade 1 to 5 trades a day and still have a very active account. Obviously, you're just doing, maybe if you're doing a lot of 0 day, especially, those trades are by definition not long in duration. So you can have a lot of darts churning through your account, even if you only have a couple of positions a day. And at the end of the day, that's kind of what I recommend anyway. People who are trying to manage 20, 30, 50 positions, there's definitely diminishing returns and all that stuff, especially if you have something else going on in your life, like a day job. Kind of hard to manage that. So I think 1 to 5 is definitely the sweet spot for a lot of our audience, except for, I know, those of you hanging out in the chat, those of you hardcores, those of you who are on your screens during the day have access to this stuff, then you probably have a lot more going. But for a lot of you out there, 1 to 5 is certainly the sweet spot, especially if you're trading a 0 day. Let's fast forward to this week. And another interesting one that we haven't really probed you on too much in the past. We'll get to that now. Get all of our probing in this week with what is your primary reason for trading options? Gave you 3 choices and the infamous other. Is it income or premium harvesting, protection or hedging, speculation, or again, the infamous other? We have one of our pro members here, Mr. Age of Delaquarius, chiming in, say he wants to echo the legendary Don Schlesinger. He says either sell options or don't sell them. So I'm guessing he's in the income or premium harvesting camp. But let's go around the horn and see what camp everyone else is in. Let's start with Uncle Mike. Mr. Uncle Mike, I know you're a degenerate premium seller if I ever met one. So I'm going to put you down for the income and premium harvesting side. But where do you think our audience is falling?
I like buying premium at times. But I do think that our audience is more to the side of premium selling, in my opinion. No doubt about that. I'd be surprised if our audience are not premium sellers.
You can admit it. It's okay. It's a safe place, Uncle Mike. You can admit that you're a degenerate premium seller. The first step to confronting your problem is acknowledging it, right?
Leave me alone. I gotta go sell some naked short straddles.
There we go. That's the Uncle Mike we all know and love. Mr. Meatball, same question for you. If you have a vote in this, if you feel you're more of a premium seller, premium buyer, something else, speculative guy, let our listeners know. And then B, what do you think our listeners are up to? Are they buying premium? Are they selling it? Are they buying some protection? What are they up to out there?
Our listeners are premium sellers. We all know that. What I would say is that in index vol, you want to be buying it right now. And in equity vol, you want to be selling it. I don't know if you've heard this thing called dispersion. I think the CBOE likes to talk about it. But that's been the trade, and that trade has worked. So today I bought vol in SPX and sold vol in some equities. And that has been the play that's been working.
CBOE does like talking about that. I did talk about that with them last week. And unfortunately, that much ballyhooed dispersion product they were talking about a lot. I thought it was interesting they got so out early in front of that with the announcement, because there's obviously a lot of moving parts to making a tradable dispersion product, and it seems like they are now coming up against that because now they're pushing out the time frame. That was supposed to be available maybe even now, and now it seems like it's probably not going to be for probably another year, they're saying conservatively. Obviously a lot of moving parts in that dispersion. I was surprised they were announcing as early as they were going to have a tradable product. Obviously, a few more I's to dot and T's to cross. But will be interesting when they finally get that to market. Speaking of the CBOE, Mr. Kevin, sir, first off, if you have a vote in this in terms of what is your preferred use case for options? Are you a speculator? Are you a hedger? Are you an income premium harvester? And then B, where do you think our audience is falling?
Yeah, I mean, I spent my most of my career trading vol arb, and I can tell you from that. I was definitely a net seller of premium. I do think that's where the bulk of the gains are going to come from. But you got to pick your spots, though. This is a very dangerous market to be selling anything in. It's unless it's puts. So I think, even in these hot sectors such as the semiconductors, it's almost like you let them run. And then as they start to run out of gas, that's kind of when the sell premium kind of shows up. But when they're in this, short squeeze or whatever you want to call it, I mean, it's just impossible to get in front of that directional trade. I would imagine the most of the listeners are premium sellers too. I mean, I think, it's just the stats are overwhelming on that side. And I think if you're going to be buying options, it takes a little bit more of, you got to pay attention. Selling options gives you a little bit more freedom to maybe have a lazier eye. But when you buy an option, it's got to be right. It's got to be right quickly. So, not saying that's not working right now. There's definitely some good trends to ride those call option buys in. But neutral selling right now looks pretty difficult, quite frankly.
Can't have a lazy eye when selling premium. I like that out there. Let's see if our audience has a lazy eye. And the answer is maybe, because they're selling a lot of premium. 55.6% out there saying, yes, they want to sell some premium. So I guess you have the lazy eye if you are selling premium, and then you don't have the lazy eye if you're buying. You got to be quick on the trigger finger out there, because 37.8% are coming down the speculative route, and then 6.7% only going for the protective route. So you folks clearly aren't bidding up the Meatballs put skew out there. So it's not your fault. And nobody voting other. Usually at least a few people chime in with a fun other or two. Everyone's all down for our three categories. Get out there. You got about a day left. At Options is the place to go to make your voice heard. Listeners, as we keep on rolling, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're keeping an eye on for the rest of the week, into the weekend, and of course into our Monday episode of the old OB. Seems like the rally somewhat mitigating a little bit out there now coming into the end of the show. S&P up about 0.5% now. The Dow up about 0.75%, and NASDAQ up a little under 0.5% as well. VIX hanging out right around 1290, 1295, as opposed to pretty much exactly where it was at the start of the show out there. So not a lot of evolution on the vol front, but it seems like maybe some of the juice coming off the upside. We were up north of 30 handles to start the show, up about 23 handles in the S&P right now. So maybe the bulls run out of steam, or maybe they're just taking another breath before the next lap north. Let's go around the horn and see what everybody's paying attention to until the Monday episode. Let's start with the Uncle list of Mike's. Mr. Uncle Mike, sir, what are you watching until the Monday episode of OB, sir?
Well, of course, watching the S&P, seeing if we can continue to get legs in this, or if this is just a 7-point pullback and we're going to rally 60 points more today. You never know. But on top of that, I know that there is a lawsuit with Apple, so watching to see how that shakes out, because I'm willing to bet that if for some reason Apple were to get back to even on the day today, I think we could get back those 7 points in the S&P 500. It would kind of have that effect. So I believe that Apple is still a part of this market. So I'll be watching that one. And then also, you got to watch NVIDIA. I mean, are we going to get to 1,000? I mean, that's just like this exciting thing. It's like Y2K kind of, only it's NVIDIA 1K or something like that. So watching those things and then seeing if the bonds will give us some type of a reaction from the Fed announcement. That's what I'm watching.
Mr. Kevin, same question for you, sir. What are you keeping an eye on into the weekend and heading into next week, sir?
Well, I will highlight, with the beginning of March Madness today, there is a seasonal component to that as the eyeballs leave the market screens and go to the TV screens. We tend to see that's a good time to sell some premium for a few days over the years. So I would imagine markets get a little quieter as we start to watch more hoops rather than stocks, which probably should keep the bid to the market. That's kind of what I'm looking for.
I like that. Selling a little premium into March Madness. Not the worst thing. You're right. A lot of eyeballs being diverted right now, for better or for worse. And Mr. Meatball, same question to you, sir. What are you keeping an eye on until the Monday episode of the old OB?
Yeah, I mean, you got to pay attention to what's happened with Apple. They kind of gotten a nice bounce, and now they're getting taken out to the woodshed today, down 4%. To Mike's point, NVIDIA, how high can that thing skyrocket? And then I'm watching these industrials and financials under the right. Have you seen GE? That thing is going straight up. Apparently GE makes chips. Apparently that's the story here.
Did they whisper the magic 2 letters? Did they get it on the train?
They must AI, GE and AI. And the industrials are having themselves a really nice day today. So I'm interested to see, my opinion is that there's no such thing as the Magnificent Seven anymore. They've all broken apart from each other. It's really a bunch of individual names. They're not correlating the way they were 4 months ago. So that's the other piece is does that trade continue to evolve?
Interesting stuff indeed. Is that the case, listeners? Are you buying that? I think there is no more Mag 7. Is that done? Is that Finn? Is that in the rear view mirror? Well, you know what is Finn? Unfortunately, is this show. That music means we have come to the end. Luckily for you folks hanging out in the live, we're not done. We'll be back in a little bit with our buddy Dan the Man Gramza. Who better to hold court on some futures and futures options action than that guy? We'll be breaking down all the action and all the stuff lighting it up over there at CME. Coming up in a little bit after the show, so stay tuned for that. Of course, if you're listening on demand, be patient. It'll be hitting your podcast platform of choice sometime later today, and you can enjoy it there at your leisure as well. But let's go around the horn, see where everybody has cooking that might interest you. Let's start with you, Kevin. If folks are intrigued by all this stuff we're putting down on the show, they want to go check out all the cool new tools and offerings over there in SEBO land, where should they go? What should they do?
They should go to CBOE.com/RMA, and you can see all the tools and analytics there that will help you make these decisions.
There you go. SEBO.com/RMA. Click the tires and light the fires. Tell them the Flowmaster sent you. They'll be very excited to hear that we heard them on the old Option Block show, or maybe in this case, Kevin. Give Kevin some love over there, too. He could always use it as well as the sole representative of SEBO South. And Mr. Meatball, sir, folks want a little bit of pit goodness in their lives. Where should they go? What should they do?
Yeah, just head down to optionpit.com. I'm putting out great content every day, and follow me on Twitter at optionpit. And I'll tweet at me if you got questions. I want to hear them.
Oh, they'll tweet at you. Don't you open those floodgates, sir, because they will come at you. And last but not least, the man who also wants you to tweet at him, at Mike TOSAW on the old Twitters. Mr. Uncle Mike, sir, while you're preparing for your next fashionably late entrance, where can folks reach out to you?
stcharleswealth.com. I would love to have a conversation with anybody. And if the Magnificent Seven's broken up, hey, they can have great solo careers. It worked for the Beatles. That's my thought on that.
There you go. Check them out. stcharleswealth.com is the place to go. We got to get on out of here. Back again in a few minutes with This Week in Futures Options. Then back again tomorrow, noon Central, 1 p.m. Eastern. A little bit of the old volatility views. What's cooking in the world of vol? Well, join us tomorrow to find out. And then after that, coming back one more time exclusively for all you pro cats and kittens with some fun in options oddities. Were there some crazy trades on the docket this week? Sure were. Did we find them for you? Yes, we did. What are they? Got to tune into Options Oddities tomorrow to find out. You can check it out for yourselves, theoptionsinsider.com/pro. Then we're back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.